This is the Asia Trade. I'm Paul Allen in Sydney.
I'm Avril Huang in Singapore. The top stories this hour. Asian stocks to advance as President Trump backs down on his Europe tariff threats, touting the framework of a deal on Greenland. The S&P 500 has its best day since November, while bonds and the dollar gain. Trump's announcement coming after a meeting with the NATO Secretary General in Davos, but details of the deal haven't been revealed, and Denmark says giving up Greenland remains a red line. Also ahead, Bloomberg reveals Apple's plan to turn Siri into its first AI chatbot, pitting it against the likes of OpenAI and Google. Plus, more big interviews coming up from Davos, including White House economic advisor Kevin Hassett and the CEOs of BHP, Mizuho Financial and the Hong Kong Exchange. But first, here's a look at how Asia is looking. Markets there should be getting a bit of a boost following on from Trump and all this talk about backing down on tariffs, including with what we're seeing on perhaps the framework deal on Greenland. Not sure quite what that means. We'll unpack that in just a bit. But we are seeing, in the meantime, data out of South Korea and the numbers for the fourth quarter. This is, of course, the advanced estimate for the seasonally adjusted basis on quarter, contraction of 0.3%. This is worse than the estimate of an expansion of 0.2%. So slower pace of growth as well if you look at an on-year basis. But in the meantime, we're also watching how Japan futures are faring. That expectation, maybe we see a bit of a bounce in Asia stocks today, following on from Trump's comments on Greenland. But watching as well the banking-related stocks today and the extent in which we can see the JGB meltdown perhaps in the rear-view mirror because of those concerns about what they mean for the risk involved for these lenders. Paul?
Yeah, in terms of yields, we did see them retreat in the US as well. The 10-year, though, still above levels where we started the week. We did have strong demand also at the 20-year bond auction in the US as well. 13 billion of debt sold at 4.846%. That was 1 basis point lower than the existing yield. So, yeah, this framework of a deal on Greenland, as you say, Avril, we don't know the details, but certainly the cooler, more diplomatic rhetoric was enough to give a tailwind to markets in the US. We saw the S&P up by 1.16%. As you see there. The VIX fell 16%. That was the most since October last year. Every sector in the green, with energy and materials leading the way. And in terms of energy, we saw oil higher too. On all the geopolitical stress, the IEA raising consumption growth forecast for a third straight month. The longer-term picture, though, for oil is still very much one of oversupply. But let's get more on our top story now. President Trump saying he'll refrain from slapping fresh tariffs on European nations that oppose his bid for control of Greenland, citing a framework for a future deal.
It looks like we have the concept of a deal. Gets everything we wanted, including especially real national security. Well, the deal is going to be put out pretty soon, and we'll see. It's right now a little bit in progress, but pretty far along. It gets us everything we needed to get. It's the ultimate long-term deal, and I think it puts everybody in a really good position, especially as it pertains to security and minerals and everything else.
Even the background piano music soothing and civil. Let's get to Washington and Bloomberg Balance of Power co-anchor Joe Matthew. So, Joe, we don't know what's in this framework of a deal, but just as the cooler, calmer environment enough?
Well, it's a great question. The mood music definitely improved today after the president posted on Truth Social the very little information that we have. Now, we've heard the president refer to concepts of a plan before with regard to health care here domestically in the United States, kind of reaching for similar rhetoric, concepts of a framework of a deal. So this is not obviously a deal that is ready to be signed. But as we're showing on Bloomberg TV, it says we form the framework of a future deal with respect to Greenland and the entire Arctic region. The solution, if consummated, reminding us it has not been, will be a great one for the U.S. and all NATO nations. Based upon this understanding, I will not be imposing the tariffs that were scheduled to go into effect on February 1st. Now, the president did make reference in an interview today to rare earth minerals, as he did just there when he was speaking with reporters, but we don't have a sense, Paul, what would be different in this agreement than what the United States already enjoys in Greenland?
Joe, just as quickly almost as Trump ramped up this rhetoric on Greenland, it's dissipating, there's a backing down. Do we have any indication of, the swift reversal?
Any indication of a reversal from the reversal? If that's what you're asking, it's unclear. This is something that really just progressed throughout the day. If I'm understanding your question correctly, and please reframe it if I did not, but the arc of the headlines today, beginning with that speech in Davos in which he was clearly agitated and referred to enemies in the room, to then learn that military options were being taken off the table, to then learn that a framework of a deal was underway, we'll just have to see if the reversal is complete.
Okay, what does this mean for the potential that the EU goes on and unfreezes the ratification of that trade deal with the U.S.?
Well, that has yet to be known. Look, the president met today with a lot of world leaders and had sideline meetings with leaders of some of the nations that we're talking about here, including Belgium, the extent to which he was threatening tariffs. Nothing's being thrown out. Scott Bessent, the Treasury Secretary, said that would be very short-sighted and the U.S. has no indication of that being the case, much like the idea of dumping U.S. Treasuries. But let's be honest, that deal was not completely baked either, and we're just going to have to wait to see if this recent change in rhetoric by the president helps this.
All right, Balance of Power co-anchor Joe Matthew there in Washington. Well, let's get analysis now and welcome Geopolitical Futures founder and chairman George Friedman. George, thanks very much for joining us today. In President Trump now saying that the U.S. is going to be involved in Greenland's mineral rights. We still don't know, as Joe was saying, what the content of this framework of a deal is. But do you think we could have got to this point without all the threats?
Probably. But at the same time, you have to understand the strategic importance of Greenland. This is not a minor issue. Since the Cold War and today, this is one of the primary routes between Greenland and Iceland for Russian submarines to enter the Atlantic. Also, with the evolution of warfare and the polar warfare, Greenland is a very important place. Why the president demanded to own it, I don't understand. We have full access to it. I don't know what kind of deal was made. But this is not trivial. This is not a random thing about Greenland. It matters.
No, and to your point, it is effectively NATO territory being controlled by Denmark, so one assumes the US could pursue whatever military aims it had in the region without resorting to threats of tariffs, etc. But what do you think has caused the change in the president's rhetoric here? Because it seems the messaging out of Europe didn't get any softer. If anything, it got more stern.
The president has a tendency, as in business, to make the first demand and make it absolutely unnegotiable, and then to negotiate. So if you've ever involved yourself in business negotiations or a poker game, you understand that it's a head game. You want to get ahead of it. It's not normal in diplomacy. It's not the way it's usually done, but it's the way he does it.
We all know how mercurial the president can be. On that note, perhaps if you could give us a sense of your judgment in why he backed down in such a manner. Could it perhaps be the market reaction that we saw earlier in the week?
I don't think it was random. I don't think he's unpredictable. He frequently makes very aggressive statements that he then backs off on. That's how he opens negotiations. He's done it many times in many ways. If you've been watching him very closely, this is not out of the norm. At the same time, it was extreme because it affected markets and other things very gravely for this day, and he then backed off. So his making an outrageous demand and then backing off is his style, and it's unnerving at times, but he's the president.
With that in mind, how much damage would you say has been caused with the relationship with Europe?
I don't think the Europeans have much of a choice in having a relationship with the United States. Many times they have resented the United States or felt the United States is behaving improperly. They got over it. It's not a question of their mood, it's what they need. And NATO needs the United States to be part of it. The United States needs NATO to protect against Russia and so on. So therefore, the reality is what the reality is, and whatever the talk is not that important.
Yeah, you point out that this is not usually how diplomacy is normally done, but these diplomatic protocols are in place for a reason. I mean, we heard from Canada's Prime Minister Mark Carney saying this is the end of the rules-based order. So how does NATO move forward from here? What does the alliance look like in the remaining 3 years of President Trump's term?
Well, in many ways, diplomacy is a slow-moving thing where propriety is very important. Sometimes it gets in the way of getting things done. Trump is not a diplomat. Trump is the president of the United States. He comes from the business world. He treats it that way. Each time he does something that appears outrageous, it turns out to have some sort of sense. And therefore, it should be understood that the norms that have existed for 80 years, since 1945, are falling away, partly because of Russia's problem because of relation with the U.S. and China. These are all evolving. And at this point, the norm that's been in place for the past 80 years is no longer the norm. As for his choice of doing it this way, well, he's the elected president of the United States, and he gets to do it. But I don't think he meant
what's your analysis of how this would have been received in Moscow and Beijing, the drama of the past couple of weeks?
Well, just as the United States can't make out Putin and why he can't reach an understanding, I don't think the Russians understand the Americans under these circumstances. This is a very different president, and they're used to presidents who operate in the framework that we cannot have tensions between the United States and Europe. This is a president who sees Russia as basically having failed in Ukraine and not being a threat, and this is a president who therefore sees the relationship with NATO evolving. NATO may not want that relationship to evolve. He does want it. So if you understand that, then it doesn't seem so odd that he's breaking norms.
George, it's been great to get your insights. Thanks so much for your time today. Geopolitical Futures founder and chairman George Friedman. We have more ahead on the Asia trade. This is Bloomberg.
Your position that there's no judicial review, no process required, no remedy available, very low bar for cause that the president alone determines, I mean, that would weaken, if not shatter, the independence of the Federal Reserve. Once these tools are unleashed, they are used by both sides, and usually more the second time around.
U.S. Supreme Court Justice Brett Kavanaugh speaking as the court hears arguments about whether to let President Trump fire Fed Governor Lisa Cook. Now, Supreme Court justices from across the ideological spectrum cited concerns about Fed independence and the potential market impact of President Trump's effort to dismiss Lisa Cook. Let's bring in our Fed reporter, Katerina Sareva. Katerina, what do we learn from the Supreme Court's oral arguments today?
Yeah, today we heard a real reticence and apprehension from the court to allow the president to fire Lisa Cook. It was really interesting, as you noted. It was kind of across the political spectrum. Both some of the conservative appointees and the more liberal justices really questioned the government side quite hard. So that's, of course, the administration's lawyer, and had just a variety of questions. And it just really seemed like they were skeptical of the president's efforts to fire the Fed governor, and concerned about what that might do to markets and what that might signal, to future presidents, as Justice Kavanaugh said in that clip that you played.
The notion of Fed independence also sits central to these conversations. Was that talked about?
Yeah, absolutely. That was brought up as well by some of the justices. Of course, there were friends of the court briefings filed by, multiple different entities, economists, former central bank officials in support of Governor Cook, making this argument that this really gets to the heart of the Fed's independence. It, of course, has had this independence to a varying degree over the years, but in recent history has enjoyed political independence, has been able to set interest rates regardless of who the president is. And so, there's concern, and we heard it today at the court as well, that allowing a president to fire a Fed official, especially when there's not a very strong cause for doing so, that could erode that independence.
So what would it mean here? What are some of the implications, perhaps legal as well, if the Fed or if the courts allow Trump to fire Lisa Cook?
Yeah, I mean, it really depends on how they do that. This case, for example, this was an emergency ruling before the Supreme Court, and they kind of indicated that they might be willing to let the case actually play out in the lower courts. They do not have to decide on the merits of the case in this decision. They were really just asked whether Governor Cook could stay on while these proceedings take place in the lower courts. So they may just rule narrowly on that. But, if, for example, the lower courts and then eventually the Supreme Court decide that a president can fire a Fed official for not much cause, pretty much because he or she does not agree with them, then you run into a scenario that Justice Kavanaugh laid out, where every 4 years when you have a new president, they could just wipe the slate clean, fire all of the governors and hire new ones. And at that point, you run the risk of having monetary policy set much more based on politics than on what might be good for the economy.
All right, Bloomberg Federal Reserve reporter Katerina Sarayeva there. The top global headlines that we're following today. President Trump says he will now ask Congress to implement his proposal to cap credit card interest rates at 10% for 1 year. It follows resistance to the policy from banking executives and some lawmakers. JP Morgan CEO Jamie Dimon says the move would spell economic disaster for the US. And Citi chief Jane Fraser says she doesn't see a realistic chance of bipartisan support. US envoy Steve Witkoff says he and Jared Kushner will travel to Russia on Thursday for talks with President Vladimir Putin on the war in Ukraine. US and Ukrainian officials say they've made significant progress on a 20-point plan to end almost 4 years of fighting. President Trump says he believes Russia and Ukraine are now at a point where they can get a deal done. Australia's opposition coalition has collapsed again in a dispute over the Labor government's crackdown on hate speech. The Nationals leader says the partnership can no longer continue amid differences with the Liberal Party over the bill's impact on freedom of speech. The right-wing coalition had already briefly split last year following its heavy defeat to Labor in the federal election. More ahead on the Asia trade. This is Bloomberg.
So we have the resources in the United States to service our debt for the foreseeable future. So there's a sense of tranquility, but I believe that might be misplaced. And my biggest concern is that the longer we continue to accumulate debt in America, in this moment of let's call it tranquility towards the numbers, when the inevitable correction happens, the far bigger that correction is likely to be.
That's Citadel CEO Ken Griffin speaking to Bloomberg in Davos about risks over growing US debt. Well, it was tranquility of a different kind on the mind of markets, this cooling of heads around the Greenland issue, really providing a tailwind to risk assets. We had the S&P up 1.16%, every sector in the green. Volatility fell 16%. We had yields claw back a little bit as well, and we can see that bond futures looking somewhat calmer and S&P E-minis pointing higher as well. The dollar also catching a bid. Well, US National Economic Council Director Kevin Hassett says President Trump's tariffs have been positively disruptive. Speaking to Bloomberg, Hassett also says he does not believe the tariffs are pushing US allies closer to China.
President Trump is disrupting an order that needs to be disrupted, and I think that markets are celebrating because of that.
Do you think that tariff uncertainty, though, we got a whiff of Liberation Day this week because of what was going on with Greenland, do you think we are past the most peak moment of tariff uncertainty for financial markets, for consumers, and for other countries?
Well, I think the tariffs have surprised a lot of mainstream economists. I used to be one of those guys, at least on the tariff front, where I've been surprised, especially.
Now you're a true believer.
It's just astonishing that everything that's in the models that we were taught when I was in grad school just turned out not to be true. And we have, I think, a strong understanding economically of why that is. It's basically that if we have a trade deficit with China forever and ever, then by definition, they're basically dumping into the U.S. with inelastic supply. And so if we put a tariff on them, then they bear the tariff. And the same thing is true for Europe. If we have a big trade deficit with them for a long time, then they basically cut their prices in order to maintain market share in the U.S. And I think the question is, the interesting question that I've been puzzling over and talking to some of my mainstream economist friends is, why is this so positively disruptive? Has President Trump's agenda been so positively disruptive for Europe? And I think that one of the things is that he's made them lift their game in terms of restoring the global order by increasing defense spending. But also, remember, it used to be that we were always talking about zombie companies in Europe. We've got to stop doing that, haven't we? And I kind of wonder if the competition that's created by the tariff and the tariff uncertainty hasn't been a real shot in the arm for the European economy.
We've heard a lot of people on Bloomberg talk about that. Actually, what Trump is pushing Europe to do is to do what's good for them.
Right.
But are you concerned about any of these unintended consequences? We saw Spain go over and have a very cozy relationship with China last year. Prime Minister Mark Carney just went over to China. Then he came here to Davos and talked about how the world order that we know is dead. And if you are a middle country and you're at the table, you're going to get eaten. Is there potentially this consequence where we push our allies closer to China, which is the U.S.'s biggest adversary?
No, I don't think that's happening at all. And I think that what is happening is that people are learning, indeed the people here at Davos, that's one reason why we're here to spread the news, is that we've got all this analysis that says that Trump's plan is working. It's working both for the U.S. economy and for the global economy. And I think that people in the end, they look at their wallets, they see how it's going. And in the United States, they're going to see a couple quarters of 5% growth and booming markets, booming wages. And if they see that everywhere else, then I think that it'll have a big political effect. I think the people who make the most noise attacking President Trump aren't necessarily speaking for their countries. They're speaking for their very, very liberal policies. You've seen President Trump call some of them out in the last few days.
National Economic Council Director Kevin Hassett speaking to Bloomberg's Anne-Marie Jourdain at Davos. Of course, we've also been tracking some of the moves in the Japanese currency. Don't forget, tomorrow is BOJ Day. No move anticipated, but the odds, or rather, should I say, the expectations from markets of where does messaging even being enough to push back against the yen weakness, that going into tomorrow is still very low. Of course, we've also been tracking the yen not just against the greenback, but also the euro, given these developments over Greenland and these threats of tariffs over major allies from earlier in the week. And in Australia, we have in the next hour jobs data that is due as well. You are for the moment seeing a bit of the yen weakness from earlier in the week moving off a little. More ahead on the Asia trade. This is Bloomberg. Let's take a look at how Asia markets are faring in the early parts of the session. We are seeing that bounce back following on from 3 sessions of declines. And of course, for Japan stocks, this is following on from 5 sessions of losses. So certainly Trump's comments on Greenland might be a bit helpful. That being said, we are also watching out for maybe some of the risks in Japan, given how the lenders were hard hit just a day ago, given the JGB volatility. Now, President Trump's decision not to impose tariffs on allies over Greenland has taken U.S. stocks back to their so-called default setting. The market now signaling that it wants to climb higher. We've got optimism about a re-acceleration in growth as well. Let's get more with Bloomberg MLive strategist Mark Cranfield. So, Mark, does this mean stocks come out on top again compared to what we're seeing in bonds and in the currency?
Yeah, for the next 5 minutes. I suspect.
Things could quickly change.
Yeah. There's relief, obviously, as you would expect, considering that the market sold off pretty heavily when people were getting concerned that Trump was raising the stakes with Europe and there could be a bit of a tariff war over Greenland, and that seems to have receded quite a bit. But of course, as often is the case, investors are missing details. There doesn't seem to be their so-called framework here, but we haven't had any details yet. And if you see some of the comments that came out from the NATO Secretary General in the last few minutes, it does look all pretty vague. They certainly discussed plans, but there's nothing for investors to really chew on too much. And if you look at where the futures contracts are, they're actually still below where they were at Friday's close last week. So there's a bit of relief, but clearly people are not going gung-ho that this is a big turning point for markets. They want to see a little bit more. And of course, in the background, there's uncertainty over bond markets, which at one time or another would always come back to buy equities.
Okay, that is another risk for us to watch out for. But what about the things that we can chew on, including tech investments? We're hearing about OpenAI getting investments to the tune of $50 billion from Middle Eastern players, and then you have earnings to focus on as well.
Well, say it quietly, but there's a risk of AI fatigue coming in here. If you look at this OpenAI story just came out in the last few minutes or so. Apparently they're going to the Middle East looking for a huge round of funding, and it puts their valuation in the 800 billion kind of mark. About a month ago, exactly the same kind of story came out from OpenAI. Markets were much more optimistic about it, and previous announcements from OpenAI in terms of their funding and their valuations have boosted markets very quickly. That's not really happening right now. And if you look at where the NASDAQ futures are, they're really not much change from when OpenAI talked about a funding round in December. There's a possibility here that people are getting used to the fact that OpenAI as a barometer of the AI story is peaking. Obviously there's a way to go here, and we've got the earnings stories coming up, as you say. NVIDIA is still some way off before they report, and the other companies will be in the next couple of weeks. But it looks as though markets are beginning to fully price the whole AI thing. It'll be very interesting to see what the US markets do with this OpenAI report, because that's the real judgment as to whether or not people see it as being something that is fully priced or there's more to go. It suspiciously looks as though we're reaching a kind of a peak here on valuations. If that is the case, it's going to mean that in the earnings season, people will have to be very optimistic in order to beat what's already in the market.
Mark, we're starting to see the uncharacteristic use of the word exciting when it comes to talking about JGBs, and the wrong kind of exciting, really. We've seen them recovering, though, after some of the drama earlier this week. Sumitomo Mitsui, for its part, sees all this volatility as a buying opportunity. But is there a risk we could see the selling continuing? Because we've got the BOJ cutting its net purchases. Might we expect to hear a little bit of commentary on this? Yeah, we probably haven't seen the end of this. The danger from the Japanese bond market here. If you look at particularly what's called the super long end of the market, that's 20 years and longer, it's clearly become dysfunctional. If you look at major markets, G10 markets, you have on-the-run bonds and you have off-the-run bonds, the benchmarks and those that have been issued in the past. And typically, you don't get a yield spread of more than about 20 basis points between the bonds which are popular now and the ones from the past. In Japan, for the very long bonds, there's a differential of as much as 200 basis points, which is crazy for a G10 market, and a very big one at that. Japanese bond market is probably only the second biggest after the US Treasury market. So if you look at what's going on there, clearly there is something very wrong with the pricing in the long end of the Japanese market. It's become chaotic, and it needs somebody to stabilize it, which is the job of the central bank. Now, as you say, Bank of Japan has been reducing its purchases, and there's going to be an announcement tomorrow. The surprise could be that Ueda has to backtrack, and he has to tell investors, the only way for us to control it is to go back to buying more at the very long end of the market. That would be a pleasant surprise to everybody. Let's see if he goes ahead with that, because something needs to be done. A central bank's job is to make sure that markets behave orderly. That is clearly not the case in the Japanese bond market, and if they don't, it's going to roil G10 markets for some while to come. All right, Bloomberg M-Live strategist Mark Cranfield there. Well, Japanese banking giant Mizuho remains optimistic about Tokyo's fiscal stance, despite this week's worried signals from the bond market. Speaking to us in Davos, President and CEO Masahiro Kihara also reacted to Japan's finance minister telling us the government's budget plan is not expansionary.
The profile of the Japanese budget, fiscal policy, has been improving, number one. Mindset of the Japanese corporates has been improving, which means that you can expand the budget, right? And so I would say that, and also many figures are improving. So I would say what Katayama-san has said is right, but she constantly has to send a message that they will be diligent on this.
The market's obviously not buying it because yields are surging.
Right.
30-year yields higher than bonds.
Right.
Might that be a contagion effect? Might we feel the spillover?
It might be, but I think this discussion has to also come from what will be the terminal rate at the end of the day, right? And
what should be the terminal rate? What is the terminal rate?
You want to talk about the terminal rate? Okay. So I think what is happening right now is that BOJ has changed their stance moving into this year, I think. So previously, I was thinking that the terminal rate might be the lower end of 1%. Based on the fact that Ueda-san is setting out the market that the current interest rate is extremely low, and also that he reiterates that he will raise rates as long as he sees development in the economy, inflation on the path. So I would say, at the minimum, 1.5% terminal rate. I think we can see that. It might be a little bit more. And then going back to your JGB question, historically, the difference between 10-year JGB terminal rate somewhere around 70 to 100 basis points. So if the market is already pricing in 1.5 terminal rate, it's 2.3 right now, JGB 10. I think it's fine. That's my call.
In terms of capital repatriation, it's looking pretty attractive.
Yeah.
Enough for that repatriation to happen in a significant way.
You mean what you're
from the U.S. back to Japan, treasuries to?
You mean those dividend coming back to Japan or something like that? I don't see a lot of that probably. That's not happening. If that happens a little bit, I think that will the yen might be go to the 155 or so, but I don't see that much.
Let's talk about the yen. The weakness continues.
Yeah.
Should the BOJ intervene, raise rates, perhaps 3 times, as some people have suggested, to give support?
I would say you are right. So, if the terminal rate should be 1.5, there's another 3 times, right? So I think they should do. Maybe they can do 1 time 50 basis point. I won't. I can expect that too. I think I kind of. Yeah.
Do you see the first move of the 3 being before June, July?
I would say the next opportunity would be April. So he can see how the corporate CEOs will react in reality to wage increase, and if he confirms that there is a significant wage increase, I think that he can confirm that in somewhere around March, April. April can be the case.
And if the BOJ does move then, how much support, what yen level do you think we will see?
Yeah, I would say somewhere, the range will be somewhere between 145 to 155. Yeah. The market is already pricing in 3 times already, probably. That's what I think, yeah.
How are you assessing the outlook for your business?
I think, so even last year we talked about this, but we are concentrating our business into 4 areas. And those areas are doing fine. Those are mass retail in Japan, asset management, wealth management in Japan, supporting the growth of Japanese corporates, and our global CI business. And we have seen a lot of significant progress in many areas. For example, in the global CIB business, we purchased Greenhill is fully integrated already. We purchased a European firm called Augusta, and we purchased an Indian firm called Avendus. And these firms will be the catalyst for our global collaboration around the regions. And this will be our next growth part. And last year, I think I said that our target will be somewhere around, for fiscal year 27, after-tax profit 1.1 trillion, ROE 10%, and then PBR somewhere around 1.5. I think we're very close to that already. So we're working on revising that target fiscal year 28, and our gut feeling is that exclusive of the rate hikes that can be expected, after tax 1.5, range of 1.4 to 1.5 trillion, ROE 12%, PBR maybe 1.75 to 2%. So that's
pretty ambitious.
Yeah, you have to be ambitious.
Let's talk about your European business.
Yes.
You did talk about how restructuring is done. Now you're going to be on the offensive.
Yeah.
What does that mean necessarily?
Yeah. So we have been concentrating on optimizing our organizational structure, also our return. From an organizational perspective, we moved into a universal banking structure we completed that last year. So that part is done. And we reduced certain branches to get more effectiveness. On the return side, we reduced low return assets. We exited from certain relationship that doesn't produce the right return for us. So I think it's about our time to go out in the market, chase for opportunities. And I think that the opportunities will come from leveraging on our U.S. capabilities, collaboration among the regions, and also Japanese nexus, and also Middle East will be also very interesting. Introducing investment to that region or introducing investment flows out of that region will be very interesting.
Mizuho Financial Group President and CEO Masahiro Kihara speaking with Bloomberg's Haslinda Amin in Davos. We have more ahead on the Asia trade. This is Bloomberg.
Apple plans to revamp its digital assistant Siri into the company's first AI chatbot, pushing the iPhone maker deeper into the generative AI race, led by OpenAI and Google. Bloomberg managing editor Mark Gurman broke this and joins us now. So Mark, tell us, how is the AI version of Siri going to be different, and how's it going to be delivered?
Thank you so much for having me. Well, as you might remember, 2 years ago, Apple announced Apple Intelligence, as well as a revamped version of Siri that would make use of AI. But Apple Intelligence came out, did nothing to lift sales. It was mediocre. People didn't really like or understand the features, lots of delays. And then the new Siri was supposed to let you tap into personal data to fulfill commands and use your voice to get stuff done on your iPhone and be able to understand what was on your screen to help you fulfill queries. Well, that never launched. It's already supposed to have launched 1.5 years ago, and it still hasn't come to market. And so a few months ago, Apple struck a partnership with Google to use a custom version of the Gemini models to power new versions of Siri and AI features. That's going to start in a couple months here with a new version of Siri that is able to bring to market the features that were delayed. But subsequent to that, next fall, they'll be releasing a completely revamped version of Siri, the one you asked about, that is redesigned and re-architected to be a chatbot that competes directly with ChatGPT, Google Gemini, and Microsoft Copilot. And that's going to run those Gemini models. It's probably going to work well, and it's probably going to be a game changer for Apple's AI efforts.
Mark, to your point, though, we have been seeing Apple kind of lagging in the AI game. What is your assessment of whether it has the tech chops to mount a serious challenge to these existing AI chatbot players?
It doesn't have the tech chops. I think they've clearly proved that they don't have the technical capabilities to rival the competing chatbots. So what they did is they're now paying Google billions of dollars a year to build much of that underlying technology for them. See, Apple customers, 99% of us, we don't care about the technology powering the product. We just want it to work. And if Apple is able to bring a chatbot to market that works, customers don't care if the underlying technology is made by Google, it's made by Anthropic, made by OpenAI, or Apple itself. They just want their phone to do the cool things that their friends' other phones are able to do. And by partnering with Google, they'll be able to do that.
Mark, thanks so much, and great scoop there. Bloomberg's managing editor, Mark Gurman. Now, the latest from the corporate front, Bloomberg has learned that OpenAI CEO Sam Altman has been meeting with top investors in the Middle East to line up funding for a new investment round. Sources say Altman is looking to raise $50 billion or more in the round at a valuation of up to $830 billion. Several other top AI developers, including Anthropic and xAI, have turned to the region to meet growing capital needs. Anthropic's revenue run rate said to have hit $9 billion at the end of 2025, and that's more than double last July's figure for a metric that projects full-year earnings. Our sources also say the company is raising around $1 billion each from Coatue Management, Singapore's GIC, and Iconic Capital. The funding round could exceed $20 billion with prior commitments from Microsoft and NVIDIA. Blue Origin says it's building a satellite communication network called TerraWave, designed to deliver connectivity to data centers, governments, and businesses. The Jeff Bezos-backed company plans to put more than 5,000 satellites in low and medium Earth orbit, delivering data speeds of up to 6 terabytes per second worldwide. Deployment is set to start in late 2027. Dr. Reddy's laboratory says it's going to launch a generic version of Ozempic in India after the patent expires in March. The company plans to make 12 million pens in the first year and produce the active ingredient in-house. This marks the onset of global competition that Novo Nordisk expects for its $30 billion weight loss drug franchise. Paul?
Let's check in on how some of the Aussie mining stocks are doing. We did hear from Fortescue Metals earlier today, the pure play iron ore producer, off about 2% at the moment. This is despite announcing shipments up 2% on year to 50.5 million tonnes. Still going okay despite demand plateauing in China. Take a look at Santos also. Production up about 0.7% on year for the oil producer. Sales revenue a bit softer than expected though, because oil prices softer as well. What else do we have here? South 32 also among the gainers. Northern Star, the gold miner, backing off a little. Avril.
Yeah, we also have trade data out of Japan for the month of December. On year, you're looking at exports following 3 months of gains as trade to the U.S. stabilizes. It's coming in a bit softer exports growth, perhaps amid the diplomatic tensions with China following Sanae Takaichi's comments on Taiwan. And we are seeing also in terms of the trade balance for the month of December, $105.7 billion surplus. This is also narrower than the survey. We have more ahead on the Asia trade. This is Bloomberg.
This is the largest infrastructure build-out in human history. That's going to create a lot of jobs, and it's wonderful that the jobs are related to tradecraft, and we're going to have plumbers and electricians and construction and steel workers and network technicians and people who install and fit out the equipment, and all of these jobs. We're going to, in the United States, we're seeing quite a significant boom in this area. Salaries have gone up, nearly doubled. And so we're talking about 6-figure salaries for people who are building chip factories or computer factories.
NVIDIA CEO Jensen Huang speaking at Davos on how AI could create job opportunities. Now, we'll be keeping a close eye on the Korea market open in the next hour. Let's bring in Asia equities reporter Yu-Kyung Lee in Seoul. Yu-Kyung, is this perhaps Huang's comment seen as another tailwind for South Korean markets, particularly the tech sector and the chip names?
Yes, absolutely. The the Jensen Huang's comments from the Davos Economic Forum was definitely providing some tailwinds and boost to the local chip makers. So we've seen in the pre-market, Samsung Electronics and SK Hynix rising more than 3%. And we've also seen the night before that the MSCI Korea ETF has been drawing a lot of money. So it's been up quite a bit. So with the leading gains in the chip stocks this morning, we're expecting quite a good open for the South Korean stock market this morning.
Yukyung, what fallout might we anticipate from that fourth quarter GDP print? A surprise contraction there. Any implications for the BOK?
Yeah, absolutely. This was actually a surprise because analysts surveyed by Bloomberg were expecting expansion of 0.2%, and unexpectedly, the GDP has shrunk 0.3% in the final quarter of 2025. But it looks like the investors in the stock market are going to brush off this news for now and focus on more forward-looking angle going forward. And if you look at the GDP growth as a whole into 2025, it was in line. It was an expansion of about 1%. So I think stock investors are largely going to focus on something more positive and forward-looking angles, such as how the AI needs a lot more infrastructure spending and build out, and a lot more $1 trillion of investments that Jensen Huang just said. I think these are something that investors are going to focus on.
All right, Bloomberg Asia equities reporter Yukyung Lee there in Seoul. We are counting down to the open in Korea, also Japan. Looks like we're going to have a risk-on day, though, after the back-down and rhetoric over Greenland. We've got Nikkei futures better by 1.3%. Market opens coming up in Seoul and Tokyo next. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens, and the handover from Wall Street, all things considered, was pretty solid after the U.S. president backed off those tariff threats over Greenland, saying some form of a framework deal can be agreed upon. You are seeing overnight how stocks managed to, in a way, outperform what we're seeing in bonds, in the currency as well, and volatility on U.S. equities that tick lower, and all against the backdrop of this so-called Greenland crisis being averted. We are going to continue watching whether those risks dissipate for markets. For the moment, let's take a look at how we are faring in Japan in the early goings. We have been seeing, in terms of flows, that foreign funds bought net yen-Japan stocks last week. So perhaps another positive indicator for what's coming into the Japanese markets. And it looks like perhaps the JGB meltdown easing off a little, and along with these Greenland fears eroding, I guess, that's helping Japan stocks after 5 sessions of declines to recoup and rebound. We're going to continue watching, though, the Japanese banking stocks. Yesterday, we saw the Topix banks. They were the biggest underperformers, given how JGB volatility, the worries and how this could play out in perhaps unrealized losses for the lenders, whether they are managing those risks appropriately. Dollar yen, we're going to watch that, of course, ahead of the BOJ decision tomorrow. You are still seeing that upward pressure on JGB yields. Flipping over and taking a look at South Korea stocks, we got the GDP numbers for the fourth quarter on an advanced estimate. This was a contraction quarter-on-quarter basis, so a lot worse than markets anticipated of an expansion. Despite how chip demand has been buoying growth in the country, you do get the sense that this is all very uneven. Does this pose a problem for the likes of Lee Jae-myung, who, of course, has been talking about how stocks in South Korea are undervalued? We are seeing now South Korea, in terms of the benchmark, gains of almost 2%. So this is a fresh record, surpassing the 5,000 level. And certainly that has been the goal of Lee Jae-myung. Maybe we see 6,000. That seems to be what some are anticipating against the backdrop, of course, of the continued weakness in the Korean won. Chips being supported perhaps by those comments from the NVIDIA chief about the extent in which jobs can be created. Let's bring in Chris Weston, head of research at Pepperstone Group. Chris, we wanted to talk about U.S. stocks, but perhaps you can also react to what we're seeing in South Korea. I mean, there is the sense that in the tech sector, this thing has legs, right? But for a market like South Korea, where we are already seeing so much divergence, how much broadening out do we actually need to see for a further leg up?
Yeah, I don't follow the review the Korean market, so to speak. So yeah, obviously we look at the high tech stocks, the AI plays, and the relationships that we have with some of the big US companies and various factors. And we're seeing TMSC, SC, they're doing very well, and in terms of Korea, high links as well, doing quite nicely as well. But I think everything seems to be flourishing quite well, and those markets look pretty strong, and that's going to spill over to a broader positive picture we're going to see through to Asia today. So I think certainly. We expect the high beta plays, the tech space in Korea and Taiwan and the Nikkei to perform very well today.
Does this mean perhaps another year of underperformance in U.S. stocks? I mean, we've gotten over the Greenland hump, and stocks across U.S. assets seems to have come out on top. But what is your sense of where we go from here?
Yeah, it's an interesting question. I mean, I think certainly with the removal of the tariff threat in the US, between US and Europe, and obviously Trump in his Davos speech pulling back and saying there was going to be no chance of military confrontation in that situation. I mean, in some capacities that has de-risked US assets. I mean, we were talking about the idea of what is going to be the political premium that comes into US assets, which probably would have been most vocally dictated through the US dollar and the FX channels more than the US equity market, because investors still want access to those monopolistic businesses in the US, and obviously the high growth plays around that. There's companies there and return on equity that you're not going to get elsewhere. So it was more a question of hedging ratios and people moving that money away. But I think the big talk this year is that we are going to get a broadening out of earnings growth, and there does seem to be a bit of a lack of love at the moment for a lot of the tech space, the semis, and given the weightings that the Mag 7 and certainly the tech space has on the S&P, if we're not going to see continued bull run going forward, then you'd expect to see some underperformance from the US. But I think had we seen the political risk premium really coming up on US assets as a result of a more sinister turn in Greenland and the negotiations around there, then you could make an argument that US assets would have had a more pronounced underperformance going forward. But I think we're looking at can the tech space, can Nvidia really find its mojo again? Can we start pushing back up to $200? Obviously, we wait for the earnings to come through. Google really needs to kick into its earnings, and that looks pretty good at the moment. But without the Mag 7 really and Broadcom to an extent really finding some good upside coming forward, it's difficult to see a solid outperformance from the US in this situation.
On earnings, though, as the focus shifts towards that, I mean, the bar is already so high. How much upside, then, can we actually see, even if they beat?
Well, I think it's interesting that the options market at the moment is implying average moves, or moves for the average company in the S&P of 4.9% up or down. So, if that was to be realised in terms of that level of implied expected movement on the day of earnings, that would be a record amount of volatility at a single stock on earnings day. So, I think that's probably thematic of the low correlations we're seeing in markets, realised correlations around 5% 1 month. And the fact that the consensus is we're going to see 13.6% earnings growth for this year. Now, that suggests that we are going to have to see a significant amount of earnings upgrades from companies. If we don't see that justifies that 13% EPS growth, then that level of of implied volatility at a single stock basis is going to come through. And, so while we're not necessarily seeing the index seeing high implied volatility. I mean, 1 month implied volatility in the S&P is still pretty low. The VIX is 16, 17%. At a single stock level, people are expecting some very lively move. Obviously, that's a risk that we need to manage. And, I think that's conditional on the level of companies coming out with earnings upgrades. Now, go back to the last quarter, 41% of companies, 40% companies have came up and upgraded. And, those companies that did massively outperform the market on day of earnings. So, right, if we get those earnings upgrades that justifies the 13%, then I think the market will be very happy in a market with the macro conditions, pulling back and being more sanguine. Yeah, we can get that break of 7,000 in the S&P, and the bulls can be happy that the market's projections of EPS of 13% growth is on the money, and I think we get that. I think the bull market continues.
Chris, when it comes to some of these tech plays, the bull market, it's also about looking at, I guess, the next winners, who's going to come out tops in the frontier industries. You have a conviction call on space. What's behind that?
Well, I go take a step back. I mean, we're still very much focused for 2026. The central theme, of course, continues to be the AI build-out, the infrastructure build-out and the funding. And obviously, we look towards Oracle's earnings that come out on the 30th of February, really or later the month, to really have a look at what's happening in that space and their CapEx plan. So I still think, what's happening with OpenAI and the funding there on the private markets is still encapsulating. But as we go later into 2026, I think a more dominant thematic, and it's already growing in legs, but certainly as we look into 2027, it's the space economy. I think that's really going to be the hot topic. I mean, Rocket Labs has been a stock that we've been looking at. It's had a blistering run from November into early this year. I think it's up 180% through that period of time, and that's just really taking the tailwinds of the the SpaceX IPO, which is I think the sort of conviction is that we're going to see that around September time, and that's going to really bring into to the front how this is all going. We're talking about a US launch situation where rocket launch into space last year was a record level, up 20%. We're talking about data centers in space, which does come with risk, debris and all these bits and pieces. But there's going to be massive investment going forward in space for data centers. The cooling is significant out in the orbit as well. So that's going to be a big part. As China sort of looks to come into this space. We're going to see. I think that's going to be the really big place, or not just with low orbiting internet as well. I mean, that's really taking off as well. So I think space is going to be the big word. The company that we're looking at is Rocket Labs. That's had a really good run, taking in some of that, and it does come with risk. Obviously, it's a leverage play. It's got good revenue growth, right, but earnings are taken backwards because of the CapEx spend there.
Interesting corner of the market. Maybe we should be watching. Chris, always great to get insights. Thanks so much. Chris Weston, Head of Research at Pepperstone Group. Now, even as we talk about perhaps future winners in the markets, let's bring things back to the here and now. When it comes to these Asia tech names, the comments from NVIDIA's Jensen Huang seems to have provided rocket fuel, so to speak, for some of the chip players. South Korea, you can see the standouts, right? These are the ones that have been lifting the market in the past, month or so. And you're seeing also, perhaps in Japan, that optimism creeping back into their chip names as well. Tokyo Electron, Advantis doing well. We have more ahead on the Asia trade. This is Bloomberg.
It looks like we have the concept of it. It gets everything we wanted, including especially real national security. Well, the deal is going to be put out pretty soon, and we'll see. It's right now a little bit in progress, but pretty far along. It gets us everything we needed to get. It's the ultimate long-term deal, and I think it puts everybody in a really good position, especially as it pertains to security and minerals and everything else.
President Trump speaking about what he calls a framework for a future deal on Greenland, which saw him withdraw his threats of fresh tariffs on some European allies. Let's get more with our chief Asia correspondent, Rosalind Matheson. Ros, Trump touting a Greenland deal. I didn't know we needed a deal. What do we know about this deal and the extent in which this is going to be enough to diffuse tensions with Europe?
Well, it's very typical Trump in that we don't know a lot about what this framework or a concept of a future deal entails. But as you say, he's now taken his threat of tariffs off the table, at least for now, and he's also taken the threat of military action against Greenland off the table, at least for now. So what is he going to get? How far along in these negotiations, and what might we come out with at the other end? It seems like what it might entail perhaps is expanded access to military bases there, which they were kind of entitled to already, but perhaps those parcels of land are designated US territory, according to some reports. So an expanded US military presence, bigger US military bases, and understandings particularly around critical minerals access for the US. And that's something that you can see crop up a lot with Donald Trump around the world is, will this deal include access to critical minerals? And in this case, certainly it seems to be the case for Greenland, but very few specific details, and a lot seems to still be being discussed, including potentially with the Danes. They don't seem to really have been involved in these conversations so far. So what is it going to mean from Denmark's standpoint? And is it enough to really diffuse tensions with Europe? Well, maybe for now at least, because if tariffs are off the table. But this is the latest in a long series of actions by the US administration under Donald Trump. Threats, coercion, humiliation in some cases. I mean, his speech at Davos this week was very critical of Europe at the same time, and of NATO not doing enough to take care of their own defence over the years. Europe being weak has been a constant refrain. And the countries in Europe, they remember that, because they're saying, well, we were allies, we thought we were working together. There was an element of trust, that T word, in our understandings, and that seems to have been gone. So fundamentally, the relationship between key parties in Europe, Germany, France, also the UK and the US, is probably shifting pretty quickly.
Yeah, I think the whole idea of, I thought we were friends, right? What is this going to mean for the future of the Europe-US trade relationship and the trade deal?
Well, that's right, because these things just intermingle constantly. You can't separate trade from geopolitics and Trump's other actions. And the Parliament has put on hold indefinitely in Europe ratifying this trade deal. So they've really pushed it potentially into the long grass. We've got European leaders meeting today to discuss next steps. But this deal was already problematic through the Parliament. Some parties in the EU were concerned about it. Now they're saying we want to actually see questions of reliability addressed. And there's that word again, reliability. It's not just about this latest episode, but in the long term, is the US a reliable partner before we sign off on this deal? Because who knows if Donald Trump is going to change his mind again in a couple of weeks. And there are other threats still hanging there. Donald Trump has threatened France, for example, with tariffs on French wine because Emmanuel Macron won't join his board of peace. So there's other elements of tension in the trade relationship still there. So at least for Europe, probably stepping back and saying, let's hold off on this deal until we get a much clearer sense of what we're dealing with.
Ross, great to have you. Thank you so much. Bloomberg Chief Asia Correspondent Rosalind Matheson with the latest on U.S. and European relations, given how Trump has been backing down on these threats of tariffs and talking about this framework for a deal. We are seeing, after that threat of excessive force to pursue Greenland was taken off the table, we already saw European stocks in the session erasing those declines. And then now, with these latest developments, you're seeing that extension, those gains on Stocks 50 futures, DAX also pointing to gains at the open, a little bit softer on the euro versus the greenback. Now, the war in Ukraine is also a key topic at Davos, and we spoke with U.S. Special Envoy Steve Witkoff, who says he'll travel to Moscow on Thursday with President Trump's son-in-law, Jared Kushner, for fresh talks on a peace deal.
Well, the Ukrainians have said that we're 90% done. And I agree with them. In fact, I think that we've made even more significant improvement over this past weekend. We were meeting with Kirill Butinov, who is, of course, their new vice president, ran military intelligence for them. Their head of the parliament, David, and with Rustam Umerov, and we made even more progress during those meetings in Miami this past week. I'll be with them tonight. And I think that, and then I'm going to Moscow with Jared. All of these discussions are...
When are you going to Moscow?
Jared and I will leave Thursday night and arrive in Moscow late at night and then go over to the UAE afterwards for working groups.
So do you think we are close to the final 10% of this deal? Do you think this will get done in the next few weeks?
The final 10%, I don't know about the next few weeks, but I know we've made more progress in the last 6 or 7 weeks since Geneva than we've made, according to the Ukrainians now. I'm going to use their, what they say. According to the Ukrainians, more progress than in the last 3 or 4 years.
We've seen, though, Russia continue their attacks, especially on critical infrastructure, most recently energy infrastructure, leaving thousands, maybe millions of Ukrainians without power, without heat. Do you think Putin is truly here for a peace deal?
Well, first of all, they're in a war, and so they're shooting at each other. And we don't condone that. I mean, we think it's unfortunate. That's why the president and me with Jared at the president's direction, while working so hard for the peace. We hope that'll occur. We think people, you're right, are suffering on both sides. It's cold there, and not to have heat is terrible. And we've got to correct all of these things. But a peace deal corrects it, and the president is focused on that peace deal. It's a very, very important part of his agenda from a foreign policy standpoint.
But do you think Putin is there, or is he just dragging negotiations on for the sake of it?
I think that they've asked for the meeting. The Russians have invited us to come, and that's a significant statement from them. And Kirill was here yesterday and working on this with us. So I think everybody is embedded in the process and wants to see a peace deal happen.
U.S. Special Envoy Steve Witkoff speaking with our colleague Anne-Marie Hordern in Davos. More ahead on the Asia trade. This is Bloomberg.
This week, live from the Alpine Mountains of Switzerland, is the World Economic Forum annual meeting in Davos. Bloomberg Television brings you unmatched coverage and conversations with world leaders, business executives, and billionaires as they navigate responsible AI deployment, economic expansion, and geopolitical tensions. Tune in for daily coverage all week. Context changes everything.
Standard Chartered CEO Bill Winters says global markets have shown significant tolerance towards geopolitical disruptions from security to trade, but only up to a certain point. We spoke with Winters at Davos about market risks from tariffs to the global credit cycle.
Another ratchet up in tariffs would certainly rattle markets as they did a year ago. I think there would still be a hope that the dialogue could unravel that. I think the security issues around the world are not. The market seems to be a bit immune to what happens on the security front in any of the theaters of conflict, but only to a point. And if it feels like it's changing the world in a structural way, or inviting aggression, for example, in any of the different spheres of conflict, I think that could be rattling for the markets.
Are clients asking you to move away from U.S. assets?
No, but like, we're a U.S. dollar denominated bank. Our main businesses are moving goods and money between markets. We're not a big asset accumulator. So no, we're not, and certainly nobody is saying you should be underweight the U.S.
But do you see a move away longer term from U.S. assets?
I think there's been a diversification of asset portfolios for some time. So. The euro was created in part to have an alternative to the U.S. dollar as a reserve currency. But the euro has had its own problems, as we know. But the percentage of reserves held in U.S. dollars has been going down. U.S. dollar still dominates. The proportion of trade that's denominated in U.S. dollars is going down significantly. China has an interest in having payment flows happening in currencies other than the U.S. dollar for the obvious reason of the weaponization of the dollar. So that diversification and that it's not even diversification sounds like you're making a risk-based decision to spread things around.
Right.
Actually, it's just there are convenient and efficient channels that aren't just the U.S. dollar channels, and those will continue to develop.
But how much volatility are you expecting in markets? And actually, it could be a good kind of volatility, or it could be the bad kind, which could come from like an AI bubble or a systemic worry.
Oh, well, when we think more broadly, I think There's been a structural shift of capital from the banking system into non-banks globally. And that's following on the capital rules following the great financial crisis, which leave the cost of capital for banks relatively high for some assets, not all assets. And that migration is happening. So the good news is, and these private credit buyers, whether they're mutual funds or big asset managers or dedicated private credit funds, they're not very leveraged, much less leveraged than banks. So if we do have this appearance of credit losses, if the credit cycle manifests itself, which it will. Right?
This year?
No, I don't know. I wish I do. It doesn't feel like it at the moment, I can say. But the credit cycle is not dead, so of course it's going to come back. And credit cycles are fine. They get ugly when that translates into a property bubble, right, as has happened in China, happened in the U.S. That doesn't feel like it's going to happen outside of China, who's cleaning their problem up. And it's really bad. They get really bad when they infect the financial system. When the financial system has to delever quickly, great financial crisis being the big example, then the credit cycle becomes amplified by hundreds of times in terms of GDP impact and prosperity. It doesn't feel like we're there because the system is just much, much safer and sounder than it has been. The debt, as we know, has gone into sovereigns. If a sovereign were to get into trouble, no indication of that, that would be a different story, but that's not going to happen.
Could we see a downgrade of the U.S. economy? Could we? I mean, is there any? I don't know if there's a flash. Is there a flashpoint that you worry about away from credit?
The U.S. economy is doing quite well. The economic growth is strong. Inflation is not as low as the Fed and others would like, but it's not out of control. And trade flows are good. Investment flows are good. So a downgrade of the economy, I don't know. A downgrade of the credit, possibly. I mean, they've got big budget deficits. No, so I think right now the world feels pretty good. I think we'd have to do something pretty overt in terms of letting one of these conflicts blow up to disrupt what is otherwise a good business environment.
Standard Chartered CEO Bill Winters speaking with our colleague Francine Lacroix in Davos. And as Bill Winters described it, markets have been resilient to this geopolitical volatility. Certainly following Trump's comments on Greenland touting a deal, you're seeing that bounce back in Asia benchmarks this Thursday. More ahead on the Asia trade. This is Bloomberg. We have breaking numbers out of Australia from the jobs market, adding 65.2 thousand jobs to the market in the month of December. So this is much better than the estimate and certainly a reversal from the slump in the month of November. Jobless rate also coming in lower than the 4.3% estimate. Word of caution here, maybe take into consideration as well how, as our colleagues at Bloomberg Intelligence have been highlighting, these jobs numbers tend to be a bit volatile. But overall, I think this is enough to keep the job market looking quite steady. Let's also talk about some of these other assets across the region. Taking a look as well at U.S. futures, we're seeing that continued tick up with the risk surrounding Greenland perhaps waning in terms of the U.S. 10-year yield. You're seeing that holding steady. We, of course, saw demand for treasuries seeping back in, demand for gold down, though. Can't quite say the same for that. So moving off those record highs. On President Trump's decision to pull back from these fresh tariffs on European nations that oppose his bid for control of Greenland, he cited this framework for a future deal. Joining us now from Washington is Kristine Berzina, Senior Fellow for U.S. Defense and Transatlantic Security at the German Marshall Fund of the United States. Kristine, great to see you. So there seem to be a bit of those worries surrounding Greenland pull back a little. But what is your sense of the key takeaways from this whole episode, perhaps in the way in which it has exposed Europe's red lines?
Well, this has been a very troubled week in the transatlantic relationship. President Trump this year has again brought up the question of wanting to acquire the territory of Greenland for the United States for national security purposes primarily. And this would counter the territorial integrity and the sovereignty that the Greenlandic people, but also the Kingdom of Denmark, have over this territory. And this came to a head with the movement of European troops to reinforce security, to Greenland last week, and then the threat of imposing tariffs on those countries that were standing in the way of U.S. claims to Greenland that would have come into effect February 1st. And all of that boiled to a frenzy this morning in Davos, where President Trump had a long speech in which he explained his rationale for wanting Greenland. But after that moment, we have seen easing up. Trump has said he would not use military means to take the territory, and then importantly has now come up with a framework agreement that he arranged with the Secretary General Mark Rutte that would provide for what he would like to see in Greenland, but would also come under NATO auspices, and that would be negotiated. But because of this framework agreement that he was able to work out with Rutte, he has also pulled back the threat of tariffs against the European countries. So we have seen the pulling back from any kind of threat of the use of force and the pulling back of this threat of tariffs, leading to a relief for the transatlantic relationship. But in the longer term, big questions about the nature of the trust and the nature of the ties that remain, because this particular episode has hurt, in some ways struck the bone of the transatlantic relationship, leaving allies of the United States thinking, well, how are they seen and what really is sacred in this relationship?
What is your sense of the extent in which we can still see Trump pursuing those Greenland ambitions, not forgetting as well how he might go about doing so, given how current arrangements already allow some form of that?
We don't know the exact details for what this framework that the President and the Secretary General of NATO have worked out would entail. Clearly, it could be something more than what he had under a 1951 agreement with Denmark, which would have allowed him the use of many bases and a lot of pre-positioning and positioning of U.S. troops that the U.S. is not making use of as it had during the Cold War. So there is so much room in the existing agreements. What more could the U.S. want? This has been troubling, but we don't know what more is in there. We don't know the full details yet, which means there's a lot of potential for this Greenland question to come back and to continue to harm the economic relationship, the diplomatic relationship between partners on both sides of the Atlantic. A year ago, right when Trump came into office the first time, we saw this blow up. A year passed, it came up again. It's a good bet to say the question of Greenland will probably yet again come to the surface.
You talked earlier about how there seems to be a bit of a permanent crack or the relationship between the US and Europe now. What is your sense of whether this whole episode has also meant the overshadowing of the situation in Ukraine?
The question over ownership and the territorial integrity of Greenland, of the Kingdom of Denmark, has overshadowed what should have been the main question in Davos this week, which is the question of what to do next in Ukraine and what can be a Ukrainian reconstruction plan and how do you put a country back together again after it suffered such aggression. These have not been the priorities, and the transatlantic allies who are major supporters for Ukraine have not been able to focus on Ukrainian issues at a moment when Russia has significantly increased the aggression that it is using against Ukraine, knocking out a significant portion of energy and of electricity provision, which means there's no heat and in a very cold moment of the winter. And yet this is not the focus of the diplomatic community. This is not the focus of world leaders. And there will need to be another moment then to address Ukraine. And so in a way, Russia continues to do what it wants to do. The world attention is not on its aggression. And this gives more time for Russia to attack and less support for Ukraine, less pressure to help Ukraine make this war come to an end.
Kristine, what are you going to be watching next most closely for the future of transatlantic security?
The details of this Greenland agreement are going to be incredibly important. What we know is that it's not just about Greenland, but it's about the Arctic and NATO more broadly. I want to see who is involved and what kind of activities could be foreseen in this reinforced NATO activity, NATO arrangement in the Arctic. At the moment, the only Arctic country that is not a member of NATO is Russia, which means that there is tremendous potential to have more activities, more reinforced security in the Arctic. Previously, prior to Russia's full-scale invasion of Ukraine, Sweden and Finland were not members of NATO. And today they are, which gives a lot of potential for greater cooperation. A second step that we're going to have to look at is what's going to go on further with a trade deal that has now been frozen between the United States and the European Union. The rhetoric, the threats against Greenland has paused the movement of that trade deal in Brussels, and the question is, does that move forward again? What will be the long-term economic repercussions of Trump's threats against Greenland, Trump's threats against Europe, and can the trade relationship recover? Can the political backing for European leaders be there, given everything that has happened in the last few weeks?
Still seems to be a number of unresolved issues. Kristine, it's been really good to get your analysis. Thank you so much. Kristine Berzina is Senior Fellow at the U.S. Defense and Transatlantic Security at German Marshall Fund of the U.S. Now, we are also hearing from the U.S. National Economic Council Director Kevin Hassett saying President Trump's tariffs have been positively disruptive. Speaking to Bloomberg, Hassett also said he does not believe the tariffs are pushing U.S. allies closer to China.
President Trump is disrupting an order that needs to be disrupted, and I think that markets are celebrating because of that.
Do you think that tariff uncertainty, though, we got a whiff of Liberation Day this week because of what was going on with Greenland, do you think we are past the most peak moment of tariff uncertainty for financial markets, for consumers, and for other countries?
Well, I think the tariffs have surprised a lot of mainstream economists. I used to be one of those guys, at least on the tariff front, where I've been surprised, especially.
Now you're a true believer.
It's just astonishing that everything that's in the models that we were taught when I was in grad school just turned out not to be true. And we have, I think, a strong understanding economically of why that is. It's basically that if we have a trade deficit with China forever and ever, then by definition, they're basically dumping into the U.S. with inelastic supply. And so if we put a tariff on them, then they bear the tariff. And the same thing is true for Europe. If we have a big trade deficit with them for a long time, then they basically cut their prices in order to maintain market share in the U.S. And I think the question is, the interesting question that I've been puzzling over and talking to some of my mainstream economist friends is, why is this so positively disruptive? Has President Trump's agenda been so positively disruptive for Europe? And I think that one of the things is that he's made them lift their game in terms of restoring the global order by increasing defense spending. But also, remember, it used to be that we were always talking about zombie companies in Europe. We've kind of stopped doing that, haven't we? And I kind of wonder if the competition that's created by the tariff and the tariff uncertainty hasn't been a real shot in the arm for the European economy.
We've heard a lot of people on Bloomberg talk about that. Actually, what Trump is pushing Europe to do is to do what's good for them.
Right.
But are you concerned about any of these unintended consequences? We saw Spain go over and have a very cozy relationship with China last year. Prime Minister Mark Carney just went over to China. Then he came here to Davos and talked about how the world order that we know is dead. And if you are a middle country and you're at the table, you're going to get eaten. Is there potentially this consequence where we push our allies closer to China, which is the U.S.'s biggest adversary?
No, I don't think that's happening at all. And I think that what is happening is that people are learning, indeed the people here at Davos, that's one reason why we're here to spread the news, is that we've got all this analysis that says that Trump's plan is working. It's working both for the U.S. economy and for the global economy. And I think that people in the end, you know, they look at their wallets, they see how it's going. And in the United States, they're going to see a couple quarters of 5% growth and booming markets, booming wages. And if they see that everywhere else, then I think that it'll have a big political effect. I think the people who make the most noise attacking President Trump aren't necessarily speaking for their countries. They're speaking for their very, very liberal policies. You've seen President Trump call some of them out in the last few days.
National Economic Council Director Kevin Hassett speaking to Bloomberg's Anne-Marie Hondon at Davos. Now, given Trump's comments, we have been seeing a pickup in risk appetite, and it's worth noting the reaction function in emerging markets after they rallied following Trump dialing back these threats of fresh tariffs on European nations. Among currencies, we actually saw them holding on to gains, these EM currencies. LATAM FX among the best performers. And in terms of ETFs, take a look at the Vanguard. This is last close, of course. Vanguard EM ETFs, we saw a climb of about 1%. So that risk appetite seeping back into markets overall. More ahead on the Asia trade. This is Bloomberg.
I think that what happened in Japan is a very important message to the House and to the Senate. You need to get our fiscal house in order.
Citadel CEO Ken Griffin speaking to Bloomberg in Davos about this week's sell-off in Japanese government bonds. Let's take a look at how they are faring in the session. Of course, it was about that meltdown earlier in the week sparked by Takaichi's pledge to reduce the sales tax without any clear plan to sort of make up for that gaping hole in the fiscal side of things. We are seeing, of course, amid the risks piling back in, the Japanese stocks are also doing well, a bit of that rebound in equities following 5 sessions of declines. And we are, of course, watching out for the extent in which Ueda-san tomorrow mentions or addresses the issues dogging JGB. Some of the ideas put out there include perhaps pulling forward the timeline for the next fiscal year of the issuance, lowering when it comes to ultra-long government bonds. Meantime, the CEO of Japanese tech and communications giant NEC says the company is not rushing into new deals, reviewing potential candidates cautiously to avoid overpaying. Speaking to Bloomberg in Davos, Takayuki Morita told us geopolitical risks have made it essential for NEC to build a global portfolio.
I think people talking about acquisitions, M&A, is a very special thing. But for me, it's a very natural, one of the basic tool of management. And we always have to think about how to wisely use our money and to grow the business, right? Especially today, right? Geopolitical situation, we have to have geographical portfolio as well, right? So I think last year, we decided to acquire U.S. company, and that's a kind of making some kind of healthier, geographical portfolio for global company.
How many more M&As do you think in the next 12, 24 months?
24 months, I think I'm not kind of in a hurry, right? And so we are cautiously looking at and the potential candidates. And I always have a kind of long list of a candidate, but as you understand, they are not necessarily willing to sell, right? We have to be very patient for that. And I'm pretty much worried about pricing, right? So if you buy the good things, but if you buy at a higher price, and then it's not good.
Are most of these acquisitions mainly in the U.S., or
No,
are you looking to diversify as well?
Everywhere. I mean, in the last 5 years, our acquisition mainly happened in Europe. And last year, we did in the United States. And also, we have some small acquisitions in Japan as well. And so I do not think we are kind of limiting our eyes in specific regions.
NEC CEO and President Takayuki Morita speaking with Bloomberg's Haslinda Amin in Davos. More from the corporate front. Bloomberg has learned that OpenAI CEO Sam Altman has been meeting with top investors in the Middle East to line up funding for a new investment round. Sources say Altman is looking to raise $50 billion or more in the round at a valuation of up to $830 billion. Several other top AI developers, including Anthropic and xAI, have turned to the region to meet growing capital needs. Anthropic's revenue run rate set to have hit $9 billion at the end of 2025. That's more than double last July's figure for a metric that projects full-year earnings. Our sources also say the company is raising around $1 billion each from Coatue Management, Singapore's GIC, and Iconic Capital. The funding round could exceed $20 billion with prior commitments from Microsoft and NVIDIA. Apple gearing up to turn its Siri, a voice assistant, into an AI chatbot, putting it in direct competition with OpenAI and Google. Sources say the chatbot, codenamed Campus, will be embedded across the iPhone, iPad, and Mac. It will be capable of creating content, generating images, and analyzing files. Apple is said to be planning to reveal the technology in June and launch it publicly in September. We have more ahead on the Asia trade. This is Bloomberg. The Hong Kong Stock Exchange CEO says the year has started strongly, with IPOs raising about $4 billion in the first 3 weeks. Speaking to Bloomberg in Davos, Bonnie Chan told us investor demand for diversification amid tariff uncertainties has benefited China and the rest of Asia.
Looking into 2026, early days, but let me give you a report. So year to date, we've actually completed already 11 IPOs. And we're in the third week of the new year, raising a total of $4 billion. The pipeline is solid.
What is solid? 400?
350 plus. Yeah, we do have confidential filings for certain categories of listing applicants. So the public filings that you see, it does not show you the full number, but it is a very big pipeline with very high quality companies. So a lot of positive things to look forward to.
Mega IPOs. I think you had 4 out of the top 10 last year.
That's right.
Are you looking at more mega IPOs this year? And might there be more non-Asian companies wanting to list on the Hong Kong Exchange?
Right. Yes. So last year we did 4 out of the 10 biggest IPOs in the world. So that was very good. This year, looking in the pipeline, we certainly have a lot of deals which are above $1 billion in terms of offering size. But I feel that this is not just unique to Hong Kong for a change. I'm looking at the other markets, and it seems like there's a big comeback for fundraising through IPOs. And so I think this will be a busy year for everyone.
So you can do better than 4 in terms of mega IPOs?
Well, I can do a lot more. Whether or not they're top 10, I think will depend on what the other markets are going to turn out.
There seems to be a Sell America theme. Is that benefiting Hong Kong in any way in the IPO space in terms of money flowing from the US to Asia, particularly in Hong Kong?
Yeah. Well, this is my 3rd day at Davos, and I would say that the one word that constantly come up in all the dialogue, it's the word diversification. So I think, you reported it a lot. The last few years, we did see maybe global capital gravitating towards the U.S. And concentrated really in a few stocks. But given all the volatility, uncertainty, unpredictability, investors generally just want to seek more ways to diversify. And I guess once sort of that mindset shift happens, they started looking around and then they realized, well, actually, you know what? Asia, China, have a lot to offer. And that's why I do feel that, this trend or this desire to diversify is playing to our advantage. Now, to your question about whether or not we will be able to attract sort of a more diverse set of issuers, besides just Chinese mainland companies? The answer is certainly yes. We see a lot of, pretty solid green shoots already emerging in 2025. So we have listed companies, for example, last year from Thailand, from Indonesia, from Kazakhstan. We even had a company which business is basically in Africa, right? And I do feel that we're going to see a lot more.
Hong Kong Stock Exchange CEO Bonnie Chan speaking to Bloomberg's Hans-Linde Armin in Davos. Now, speaking about that diversification and how that has benefited Chinese stocks, it's worth noting that they defied the global selling just a day ago, given the tech bets futures pointing to further gains in the Greater China region. We'll watch how markets fare today. That's it from the Asia trade. The China show is next. This is Bloomberg.